Shane Oliver, Chief Economist and Head of Investment Strategy at AMP Capital Advisors. It's good to see you here. I'm curious what you make of this leadership fight, Shane, and what it means for the perspective of investors on Australia.
Well, it's great entertainment value, and it's also a bit of a soap opera. It's been dragging on now for quite some time, ever since Julia Gillard ousted Prime Minister Rudd back in 2010. So in the great scheme of things, it's been around for a while, but it's obviously just come to a head. You'd have to say it would be a negative for the Australian economy and therefore for the share market, but it's always hard to quantify the precise impact. We do observe in Australia that during election campaigns, businesses hold back a little bit, put off investment decisions, and likewise consumers, because of the uncertainty, hold back a little bit, and retailers observe a bit of a dip in sales, and then of course things return to normal. The trouble in Australia, I think, is that for some time we've had these leadership battles sort of raging, and I think that could be an additional dampener on the Australian economy, at least in terms of retail sales and business investment decisions. So I think it is having a bit of a negative impact. There's far more important things, of course, driving the Australian economy: the strength of global commodity prices, interest rates, the Australian dollar, all those sorts of things. But I think one of the factors which might be acting as a bit of a constraint on our share market over the last couple of years has been this sort of political uncertainty associated with a minority government and, of course, more recently, the leadership tensions.
Let's talk about Julia Gillard for a moment, because yesterday she said, I've made mistakes over the past 18 months. She said she'll try to learn from those mistakes. How would you rate her performance on the economy as an investor?
Well, yeah, I don't really want to wade too much into the political debate here, which is what I would do if I start rating her. I think overall the government's done a reasonably good job, but I think their main achievements were, of course, through the GFC. Australia was in an enviable position in terms of being able to provide stimulus to the economy through the course of the GFC, and we were the only OECD country to go through the GFC without having a recession. Now, of course, one might say, well, Prime Minister Rudd was in charge at that time, but I think even in the recent years there have been some good moves by the government to, for example, to increase the superannuation contribution, provide some certainty around a carbon tax, the planned cable around the country, national broadband network. I think all those things are quite good achievements. But the trouble is that the leadership tensions have drowned out those achievements, such that one would think that Australia is sort of a constant state of siege in this battle between two potential leaders of the Labor Party.
I'd like to focus now on the economy. The expectation, according to analysts we've surveyed, is that the Reserve Bank, the central bank there, will stay on hold with interest rates at the next meeting. But you're pushing for a cut or tipping for a cut. What's your expectation?
Well, I was looking for a cut, but the rhetoric from the Reserve Bank seems to have become more hawkish. In fact, progressively so since the meeting 2 weeks ago when they left interest rates on hold. Following that meeting, and even looking at the minutes a few days ago, it looked as if the Reserve Bank still had an easing bias, but the hurdle to ease was quite high. In other words, it required a material slowing in the economy. Since then, of course, the comments today by Governor Glenn Stevens imply that he's quite happy with rates where they are, and you sort of get the impression that the easing bias has been dropped altogether. So for the time being, I think rates are going to stay on hold, probably out to May. I think there's still a strong case to cut interest rates, though. If you look at measures of consumer and business confidence, they're still quite subdued. Anecdotal evidence regarding demand in the economy is soft. Manufacturing is struggling, retailing is struggling, housing is struggling, and tourism is struggling. So yes, we've got this mining boom going on, but I think the weakness in the rest of the economy is perhaps greater than the Reserve is allowing for. Put that together with the rise in bank lending rates we saw a couple of weeks ago, and of course the strong Australian dollar, and I think it all adds up to a case for a rate cut. But obviously the Reserve Bank doesn't agree with me, so I'd have to say for the time being we're going to stay on hold.
All right, Shane, last question for you. It has to do with the Australian dollar. Even with this political turmoil, we haven't seen a lot of movement in the currency. What's your expectation here, given the fact that commodity prices have held relatively firm?
They certainly have, but my view is the Aussie dollar will stay strong. We've had that huge run up, getting above $1.08 a couple of weeks ago. We've been going through a bit of a consolidation in the sort of $1.650 to $7.50 sort of range. It might go for a little bit longer, but I think ultimately the Aussie dollar will push up in the next month or two to retest the highs reached last year, which was $1.10.7. So I think that the trend in the Aussie dollar still remains up. We've got strong commodity prices, which in fact would justify a higher level for the currency than we currently see. We've got prospect of continuing high interest rates in Australia compared to the rest of the world. Other key countries are pumping cash out, whether it's Japan, the UK, Bank of England, ECB next week with its Latrobe program, and of course the Fed. So all of that is increasing the supply of all these currencies relative to the Australian dollar. So I think there's still more upside for the Aussie dollar to come beyond the consolidation we're currently going through.
Okay, Shane, we've got to leave it there. Good to see you. Shane Oliver of AMP Capital Investors